All right, so we're seeing the futures move up pretty meaningfully higher right now, Ross. But I want to ask you, overall, when we're looking at the market, has anything meaningfully changed? We heard from Jay Powell. He was actually pretty neutral. We had Roger Ferguson on yesterday expecting the Fed to strike a neutral tone, and Jay Powell specifically. Also, we're still expecting 2 rate cuts. So what's changed, if anything?
I think not much has changed, but I think the market likes that, right? In a time where there's uncertainty basically everywhere investors turn, I think the Fed holding course and not really leaning into that tariff inflation fear and those stagflation worries, although the SEP did signal that a little bit, is reassuring the markets. And the fact that they didn't strike an overly hawkish or combative tone is probably enough for markets at this moment in time where uncertainty is everywhere else.
Do you think the market should be worried about stagflation? I mean, he didn't set a forecast for stagflation. That wasn't what they said. But, you know, slowing economic growth, inflation being stickier than expected. And then there's also the potential continued shock of tariffs or other announcements from the president that might hamper just, you know, business leaders making decisions, small business leaders making decisions. Should that be a rising worry for the markets?
Yeah, I mean, I think that's primarily what is behind this 10% sell-off. So I think the market is properly worried about it. It's still not our base case. I mean, we could policy uncertainty our way into a recession if we keep this going for long enough. Hopefully that April 2nd date provides some tariff clarity and allows the administration to move on to some of their more pro-growth items for businesses to focus on. But as of right now, the fundamentals aren't suggesting recession, and the fundamentals aren't suggesting a meaningful uptick in inflation. So, you know, we're not in a boom time economy, but I don't think stagflation or recession is the base case, you know, in the next 12 months.
All right. So you don't think recession is the base case. So you're saying this is a viable dip if you don't think a recession is coming in the near term. So I have a secondary question for you. Does that mean the tariff risk is already priced into the market? Because we know that those reciprocal tariffs are going to start on April the 2nd. And this comment from Treasury Secretary Scott Bessent just kind of got my wheels turning. He said that each country will receive a number that we believe represents their tariff. So no matter what, no matter how much data you look up, you can't really know what the tariff levels are going to be because it's going to be decided by the administration based on how they view real tariffs and also trade barriers. So do you think all that risk is priced in April 2nd? We're not going to see a sell-off?
I don't know if it's all priced in, right? I think if there's not some level of clarity, right? My assertion this whole time has been companies don't like tariffs, but they can deal with tariffs the way they deal with a lot of other business environments, but they need to know the rules of the game. So if April 2nd brings the rules of the game, right, even if they're the ones determining the rules, then businesses can move on and start to plan for the future and plan hiring and plan CapEx. This whole thing to me is about the uncertainty and not about the tariffs, right? In a perfect world, businesses would take zero tax and they would move on with their day, but that's not the reality. But they need to know the rules of the game. So hopefully April 2nd brings that, and then the administration can move on to deregulation and tax cuts and the things that the business community was so excited about in December and January before trade moved front and center.